Good evening, everyone. I welcome you all to the panel discussion on foreign exchange markets. Today we have a esteemed guest present with us, uh, Mr. Pathik Patwari, President GCCI, uh, Mr. Apurva Shah, Honorary Treasurer GCCI, Mr. Maulik Shah, CEO and co-founder Almas Risk Consulting, Mr. Maulik Jasani, Group CFO, Harsha Engineering International Limited, and Mr. Johnson Francis, the Head for Commodity and Currency Business, NSE. Today, I will be taking you through the seminar. Forex volatility is one of the biggest pain points involved for exporters and importers. One key dilemma of exporters and importers is how to hedge their exposure. Today, throughout the session, we will try to answer some of your questions on this. We have two very distinguished gentlemen who have very different experience and perspective on this field. To start the session, I would request Mr. Pathik Patwari I would request Mr. Apurva Shah, Honorary Treasurer GCCI, to present the welcome address. Sir.
Good evening, everyone. On behalf of Gujarat Chamber of Commerce and Industry, we welcome all of you here on the Forex Risk Management Seminar hosted with NSE together. And NSE is the National Stock Exchange platform which provides Forex services at the same time trade services and multi-services. They've partnered with GCCI to hold this event for awareness on Forex risk management and other avenues where you can increase your trade, safeguard your trade. At the same while, we would also had the opportunity to have two excellent speakers. One from Bombay, Mr. Maulik Shah. He's a co-founder of Almas Risk Consulting, and Mr. Maulik Jasani from Harsha Engineers. He's a Group VP Finance and CFO. At the same time, we were about to have Mr. Ashish Goel. Unfortunately, he had a trip to Bombay, so he could not attend the same. We have excellent speakers, people with immense knowledge on Forex trade, people who have gone through the journey of different phases on Forex to enlighten us on the subject and give us a brief on the subject. I would also request everyone, once both the honorable speakers have spoken, you could list your questions and give it to Mr. Sisodia so he could guide you further on your queries or any subject on the Forex. Thanking you once again. We hope to have a brilliant session. Thank you.
Thank you, sir. Now I'd request Mr. Johnson Francis from NSE to present the welcome address from NSE.
Good afternoon, everybody. Thank you. Good evening, everybody. Every corporate, large, medium, or small, definitely has a pain point in managing Forex risk. Particularly when there is volatility and uncertainty, every corporate needs some help and guidance. When there is volatility and confusion, the standard question that we ask is, "Su lage che?" Right? So to answer that question, we have two eminent experts, right? Friends, it is my honor and privilege to sit here and extend my humble gratitude to GCCI. GCCI has given us this platform to represent the industry. Thank you, Mr. President Pathik Patwari, sir. Thank you very much. I express my thanks to Mr. Apurva Shah, the Honorable Treasurer of GCCI. We have eminent speakers from the industry. Mr. Maulik Shah, CEO and co-founder Almas Risk Consulting Mumbai, has taken his time and he has come over here. And Mr. Maulik Jasani, VP Finance and Group CFO, Harsha Engineers International Limited. So saying, I welcome you all, the distinguished guests for this particular session. Thank you so much.
Now I would request Mr. Apurv Shah to felicitate our speakers. Mr. Apurv Shah will facilitate Mr. Maulik Shah from Almas Risk Consulting. Thank you, sir. Now I would request Mr. Shah to hit Mr. Maulik Jasani, Group CFO of Harsha Engineering International Limited. Thank you, sir. I would now request Mr. Johnson Francis to felicitate our speakers. Mr. Johnson Francis to Mr. Jasani. I would request Mr. Francis to please present the memento to Mr. Maulik Shah from Almas Consulting. I would like to request Francis sir to please present the memento to Mr. Apurv, Mr. Pathik Patwari, President GCCI. Thank you, sir. So now we will begin our presentations for today. I would like to first welcome our first speaker, Mr. Maulik Jasani. Before he starts his presentation, I would like to give a brief about his profile. Mr. Maulik Jasani is the Vice President and Group CFO of Harsha Engineering International Limited. He is associated with Harsha since 2018 and is holding the position of Vice President Finance and Group CFO. He holds a bachelor and master degree in commerce. He is also holding CA, NCS, and CMA qualifications and having membership in all 3 professional institutes body. He has over 16 years of experience in finance and was actively involved in listing process of Harsha and various other M&A activities in the past. Prior to joining Harsha, he was associated with Biotech Vision Care Private Limited as CFO and was also associated with Zydus Life Science, Dark Limited and Mukesh M. Shah before that. So without wasting further time, I'd request Mr. Jasani to start his presentation. Thank you.
Thank you very much. Good evening, ladies and gentlemen. Am I audible? Good evening, ladies and gentlemen. I am very thankful to GCCI and NSE for allowing me this presentation and welcoming me in this seminar. We know the risk and risk management. These are the words very well associated with us since our born, and I will say before our birth. You see that whenever there are risks, and there is always a risk management. During our mother's pregnancy, there has been some risk that has been managed. Even if we see when we give signing off from the world, the dead body is also having some risk and some risk management. So what it say that in the life, risk and risk management is associated with throughout the life. The important part over here is you can't eliminate the risk, you can't exclude the risk, but you can obviously manage the risk very well. And that's what is a continuous process. It's not a one-day process or one-off process. With that background, let me start with my presentation, where we are going to discuss about forex risk and forex risk management. These are the contents I'm planning to discuss today, and I will try to cover these contents in next 15 to 20 minutes. What is the forex risk? The forex risk is also known as an exchange risk or a currency risk, where there is a financial risk posed by an exposure to unanticipated changes in two currencies exchange rate. As you know, the currencies are fluctuating, and we always have a risk posed by that on our various losses. That can be a direct loss because of our unhedged exposures on our books. There can also be an indirect loss, due to which we can have an impact on our cash flow, assets, liabilities, profitability, and last but not the least, on the valuation of the organization, which can be in the form of market cap, or if it is unlisted organization, in the form of market enterprise value. So we will discuss more about the indirect loss impact of the forex risk in the coming slides. If we see how the currency has performed over last few years, I have tried to show here the last 5 years performance of the two major currency, USD and Euro, against the INR. As you can see, both the currency has actually appreciated over the last 5 years. The USD has appreciated at the pace of 27%, and it is posing at 82.77 as of now, while Euro has appreciated at around 10%. So here also it is witnessed that both is not parallelly increasing. More importantly, as you can observe in the graph, both the graphs are not going upward directions, and it is not a always uptrend positions. You are always saying that there are many dips in the various period of the time, and that is what actually creating this the forex risk. As you can observe, one of the biggest scenario which we have recently witnessed in the Euro scenario, where in September, October 2022, we have seen the Euro has been depreciated to the extent of 87.5 rupees. And if you, sorry, 78.5, my bad, 78.5 rupees against the 80 rupees 5 years before. So that's the risk we carry, although it has now came back to 87.9. And we have to manage this risk. And this proves that, this zigzags proves that this risk has to be managed well. Otherwise, we will not be in a good position in a long run. Now going to the next slide. So what are the type of risk? So first, there are two types of major risk on the forex risk management. One is a translation risk and another is a economic risk. On a translation risk, we always find a risk on account of our foreign assets and liabilities, either in form of our foreign operations and subsidiaries, or because of the foreign receivables, payables standing in our books. This is only on account of the conversion of that assets and liabilities and doesn't involve any monetary losses. While you see the economic risk, which includes the cash flow involvement, and in the economic risks, we found that transactional risk is a daily operational risk, where you either settle your receivables or payables at a different exchange rate than the original exchange rate you have entered into. That's a transactional risk we observe. There is also a real operating risk, where, and this is more important risk to the any organization, which accounted on account of the operation risk, which is resulted due to fluctuation on the various forex exchange rate. One of the operation risk we have is a future cash flow risk, like due to our exposures in various foreign countries, either on account of export or on account of import from that countries. We always have a future cash flow risk. Say, for example, Harsa is having a significant exports to the Europe. We are having almost 250 crore of exports to the Europe. We have an export of 100 crore to the China. This exports is always on a risk if there is a fluctuation happens in the currency of Euro versus INR and RMB versus INR. That is a future cash flow risk, which is still not lying on my books, but it is going to affect me in the future. Second important risk is a competitive disadvantage risk. Over here, despite of an entity which may not be having any forex exposure on the books. So I'm sure the people who are present here would have some exposures, and that's why they are here in the presentation. But if you see any organization which is not dealing in any Forex, still they are exposed to the Forex risk. How? Say, for example, Euro has been depreciated to 78.5. Then any import from Europe to India becomes cheaper at that point of time. Because for the same amount of euro, previously you were paying 90 rupees per euro. Now we have to pay 78.5 per euro. And that actually attract the importers in India, and that can create a competitive disadvantage to your product, despite of your product is not affecting by any direct or indirect Forex exposure. When I say indirect Forex exposure, it means your supply chain is also not having any Forex exposure. Despite of that, you are at a risk, which is an economic risk of your operation. Another economic risk of operation you can observe is because of your high presence in any one territory. Say, for example, you would have observed that whenever there is a USD INR rate goes ups and downs, you see that IT companies will have an impact on their valuation, their expectation of performance. What is that reflect? That's a future cash flow impact on that economic risk. So having said that, these are the type of Forex risks which we have to address. Some can be addressed through hedging strategy. Everything cannot be addressed through hedging strategy. Just like competitive disadvantage risk, you only have an option to be a better margin product or reduce your own cost rather than hedging that risk, because you do not directly expose to that risk. That's the indirect exposures to the risk. Yeah. So Mr. Gary Cohn, who is a vice chairman of IBM, has very well said that if you do not invest in risk management, it doesn't matter what business you are in, it's a risky business. So the most important parameters in the current world is a risk management, whether it is a Forex risk or any other risk for that matter. Although we are discussing today is a Forex risk. Even Mr. Gary Cohn has represented as an economic advisor to Donald Trump during his presidency. Now, what are the factors which can influence the Forex risk, which are there on your books, or which likely is going to be there on your books? One important parameter is obviously external factors where you do not have a control. And the highest fluctuation on any foreign exchange currency has happened due to demand and supply. That's the normal norms of any products and any commodities where prices will fluctuate. And again, exchange rate is also one of the commodity which gets fluctuated because of the demand and supply norms. So the biggest external factor is a demand supply. Obviously, another factors are a geopolitical risk because of the natural calamities and catastrophe, and many other external factors. So knowing that the major exposures to the foreign exchange risk are external factors, that more prove that, and it is more relevant for you to have a risk management policy in place. Now, another internal risk, what are the internal factors which can impact our Forex risks? One is open exposures. Whatever the management has taken a call that they don't want to hedge something, or they don't want to take any risk management tools against something, that is a open exposures which can directly influence your Forex risk. Another is a pricing methodology. What do you mean by pricing methodology here is, if your sourcing prices are directly associated with the Forex because of the import, or your supplier is depending on some imports, or your selling prices are directly associated with any Forex exchange rate, then your pricing methodology also play a vital role on your Forex risk. If you have a good pass-through mechanism, you are a naturally hedge. If you don't have a good pass-through mechanism to your customers or from your suppliers, then you are at a Forex risk. Very relevant example over here is a crude oil. You would have seen that although crude oil itself is a commodity and which itself gets fluctuated, but despite if it is remains stagnant, you will have an impact in India because of the exchange risk attached to the crude oil also. Recently, we have witnessed that due to this Ukraine war, India has started trading the crude oil with the Russia. What two advantage India has done? One, obviously, India can buy at a cheaper rate of the crude, but the more importantly, India can buy at a rupee and a Russian currency, Russian peso exchange rate instead of the rupee USD, which has also advantaged the India significantly, because that was the time when Russian peso was Russian currency was significantly impacted. And that are two edge advantage to the India. And that is how the pricing methodology can play on your risk management. Another factor is objective of Forex and its end use. So important point, if you are having a recurring exposure to the Forex, you definitely need a better risk management tool, which you can implement on a regular basis. But if it is a one time, say for example, you are importing some machines from the Europe or Germany, or you are you are having a one-time raw material requirement because of some supplier constraint from India, then one-off is always possible that you can manage that risk in a temporary manner. But if it is a recurring risk, you have to manage it more wisely and more deepen. Another factor which can impact the risk is a lead time. What is the lead time from the receiving order and your supply time? How well? So there are some capex industries which have a very high lead time exposures for making a product and supplying that product. Then they have a higher risk exposure. And it is a just-in-time requirement, it has a lower risk. So you have to be very clear on this fundamental points within your organization, that how that impacts your own risk of your organization. Another one is a trade credit days. How much credit days I am giving to my buyer, or how much credit terms I am taking from my supplier. So if I have to pay on upfront cash, I am at a different risk. If I am having a credit days, I am at a different risk. Same is with my receivables. If I am having a LC, I can discount it. There is a different credit days. Last and important point is whenever there is a changing scenario in your business organization. So if you are changing your market, if you are exploring some new market, there is always apart from the pricing, there is always a risk of Forex. When you are going for a geographical change in the market, if you are changing your product mix, which is a different margin products, then there is also a Forex risk attached to it. And if you are changing your sourcing of material, there is a risk of Forex risk attached to it. Having said that, now I have some points before going to the strategy, how we can hedge the risk and what we do at HRSA for various things. What we can think about the risk management. So what are the points we should ponder before entering into the risk management strategy? We have a very buzzwords after one web series came, that risk hai to isk hai. But if you see that what has been ended with the Harshad Mehta, that was not something one would like to have it in the isk, right? Harshad Mehta has ended very badly. So what I would say rather, that risk management hai to isk hai. Only risk hai to isk nahi hai. So with that saying, what I will say here is every risk has a price. The moment you decide what price you want to pay for that risk, accordingly you will have your own reward also. So every risk has a price and every price has a reward. With that things, the most important part while we are defining any risk management strategy is first is to be aware about the risk and to accept the risk. Till the time you are not aware about the risk and you don't accept the risk, you can't manage the risk. So that is the most important parameters in the risk management policy. Now, while you are accepting the risk, the second most point is you have to recognize what are the risks and what is your position over there, where you stand there. According to me, there are 3 levels where you can define your positions and you can recognize your risk to the Forex. One, when you are making your budgeting exercise. Say, for example, in our company, HRSA, we know based on our past experience and our contracts with various customers, what level of exports we are going to do in the next year. So at the time of budgeting only, I know that I will have 30 million USD exposure, 20 million euro exposures during the year. So that is the recognition of my risk at the time of budgeting only. The early I recognize my risk, the better I can manage my risk. And that's the trend follows everywhere. And so is the case with the Forex. Second risk, if I'm not able to recognize my risk at the time of my budgeting exercise, I at least have to recognize my risk at the time of ordering, whether I'm putting my import order or whether I'm winning my export orders. Say, for example, even in HRSA, during the year, we also win new orders, we win new outsourcing businesses. So we realize that risk exposures at the time of new order receipts. So that is the time when we recognize the risk. Yes, I have received this order and this is the risk associated with this order based on my lead time, trade credit days, whatever we have discussed in the previous slide. If not that time, at least you have to recognize your risk at the time of delivery. So at least you have some short-term arrangement available where you can take your hedging strategy or risk management strategy in place. So after recognizing risk, the most important part comes is measuring the risk. What is the value at risk? The value at risk, so something which you cannot measure, you cannot manage. So most important part here is you have to measure the risk. Once you know that, yes, this is my positions of the risk. Now I have to measure how it will impact me. Say, for example, today my rate is 83 per dollar. If it becomes 90, what will be my risk measurement? And if it becomes 75, what will be my risk management? Or what will be the risk to my organization on that scenario? That measurement has to be very clear upfront with you. Unless you do all these points and ponder over that and write it well, you can't create a good risk management policy. Next important point is, what is your objective when you intend to do a risk management with the Forex? Whether your objective is to maximize the saving, which should not be the case according to me, because this is not your business to earn from the Forex risk. But still there are some organizations which really have a target to earn on the Forex, which I suggest is not a good idea. The next is whether you want to reduce your losses. So obviously you being an Indian manufacturer, you have your own target cost. So whether you want to manage that target cost and reduce the losses, or the most important part, and according to me, this should be the primary objective of any risk management, is mitigating the risk. Because philosophy of risk management is not to earn the profit or make it a profit center, but the philosophy is to mitigate the risk, which can be likely there in the future on an ongoing basis. So one has to define the objective very clearly. And if your management is thinking that is a profit saving tool, please make them understand this is not a profit saving tool. I have actually heard few directors, internal as well as external, they are proud of saying that, okay, this quarter, because of exchange rate, we gain 50 crore. I'm sorry, is it a gain or it is a risk? You have to be very clear. If it is because of your risk management policy you have gained, very good. But if it is just because of the risk exchange rate has moved some positive side for you, it's a risk for future. This 50 crore can be negative in the next quarter. Moving next, when you define your objective, then it's a big time to define your hedging policy, which will drive your risk management approach. While defining hedging policy, you have to define what are the tools you will use, and we will discuss some tools in the next slides. And I'm sure the senior Maulik ji will give you more ideas over there compared to me, because this is his day in, day out. But still, while defining the hedging policy, the most important part is you have to define your benchmark. That when you are entering into risk management, what benchmark you are targeting to achieve. While I'm talking benchmark, the three things come to my mind as a benchmark, and what we also follow in HRSA is a budgeting benchmark. At the time of budget itself, we define that what exchange rate we want to realize, at what exchange rate I am not going to be negative. So you have to budget it that at this exchange rate, I will be always positive, whether I'm importing or I'm exporting. If you are not able to do it budgeting because you do not have clarity about the exposures at the time of budgeting exercise, then you should have a costing rate. What is the costing rate stand is? This is the rate at which you will be either break even or you will maintain your margin rather than break even, I will say. So the rate at which, if Forex will reach either upside or downside, you will be able to maintain your margin. That's your costing benchmark. And you will compare your actual performance with this costing benchmark or a budgeting benchmark. If neither of these is available, then you will follow the FR, which stands for first day forward rate. What it means, you will do a first day forward rate as your benchmark rate, which stands for the moment you enter into any transactions which is having a Forex exposure, you will, the same day you will realize what is a forward rate of these transactions at the time of settlement. Say for example, I am doing an export today and the rate is 83 today. And at this exchange rate, I'm doing a for export of 120 days credit terms. Then what is the forward rate at the end of 120 credit days? That is the rate which will become my benchmark. I should settle with that rate or a better rate on my export. And same is the reverse with the import. If I'm entering into any purchase order of raw material or a capex with a credit terms of 120 days, then I will benchmark 120 days forward rate of buying, and that should be the rate at which I should buy or lower than that. So you should benchmark your rate either case to case basis or for your volume of exposure, which you have defined in your point number 2. The next important area is to define a stop loss strategy. So, you know, in Gujarati we say કે જે દૂધનો ડાજેલો હોય ને તો એ ફૂક મારી મારીને છાસ પણ પીવે. So you have to define a stop loss. If you don't define it, definitely એકવાર તો ડાસશો. So what happen is stop loss stands here. I have my benchmark stat, but due to my any policy or due to my hedging policy, I have kept something open as an open exposure and want to test the market. Then that open exposure should also have a stop loss. Say for example, my benchmark on the previous example I have said 83 to forward rate of 120 days is a 83.5, and I have not done any forward there. The moment I have a stop loss of 1% over 183.5, say for example, the moment that rate triggered, I have to take the loss and take a forward. Despite of it will be negative to my benchmark rate of 83.5, but I will stop my losses. And same goes for the take profit strategy. We being Gujju and equity guys, we understand this very well. What do you mean by stop loss? What do you mean by take profit? The only challenge is we do not execute it well. And that's the practice we have to follow. And that was come as a next point. Yeah, be consistent. What you define. You have to follow your strategy consistently. The moment you keep your risk management policy changing, you are jumping from one gun to another gun, but you will not, it will not resolve your problem. You will have a more problem the moment you are not consistent. And that's why whatever policy you will define, be consistent with that. And the most important point I have put in the bracket is avoid post-mortem advice. Sorry to say, but yeah, you will get few advices from the market. ये किया होता तो बच जाते, वो किया होता तो बच जाते. Past you can't change it. So just take an example and maybe some crude example. But when you are doing a heart surgery, then it's an open heart surgery is a better doctor, or the person who is doing a post-mortem is a better doctor, right? Live is a better, right? So you need a wise advisor in your company, and that's what we also do have. Especially when you are having a high exposures, don't rely on your internal resources, because you internally you will have quite a few things to do with. The person like us may not be able to spend that much time on the forex risk compared to the forex advisor will spend on your own forex risk. So you need a good advisor, but you don't need a post-mortem advisor. That's a very important thing. So wisely choose your advisor. Next important thing is keep it simple and less complex. There are multiple products available in market. There are multiple things available in market. But still, if you see, after multiple centuries, vanilla is still a best flavor of ice cream. You have a multiple options available in market. You will always choose vanilla as a first best flavor. And same goes with the risk management. Go for a simple, less complex products, and that will save your life. Most importantly, be consistent. Next important point, revisit your risk management policy at a regular interval, and at least at the time when there is a major macro scenario change. As we discussed in the previous slides, the maximum impact on the exchange rate is being done by the external factors. You do not have guts to change a 0.001 paisa also as an individual. All are the external factors which can hit. Yeah, obviously, when I say you, it doesn't include RBI. Okay. Yeah. Having said that, please revisit your strategy at a regular interval and a special macro scenario, and follow a 4I concept. You should have a maker checker within your organization for a major risk. If your exchange risk is a major risk, you should have a maker checker policy available within your organization. Having said this, let me quickly touch upon what are the hedging strategy available in market. I am sure you all guys are aware, and maximum of that you are already using. Simple, important is natural hedge. If you are importer also, if you are exporter also, if there is a natural hedge, nothing like that, right? So it's like a win-win marriage for everyone. But if you are only one way, either you are importing only or you are exporting, or your import is higher than your export, or vice versa, then there are various tools. One is a forward hedge, which is a simple strategy people follow, and most of the time we follow the plain forward. There is also extra forward available in market and a range forward available in market, but this policy is only available to a company having a specific net worth, most likely 500 crore plus. So only those companies can get this range forward and extra forward at a some premium rate. American, European forwards, you all are aware, majority follow Europeans with a month-end policy or a 15 days policy. There is a futures and options hedge available. Either you go for a call put options or a put options. Money market hedge, which is just a reverse policies whereby you can do lending and borrowing at a current date instead of going for the future market policy. But the product of the market is actually forward hedge and future and option. Rest everything is a technical products, and you should use only if it is directly applicable to your specific transaction. Another is a currency swaps and a rate swaps. I'm sure that quite a few of you would have been witnessing the 2008 or 2009 scenario where there has been a fiasco, or because of the multiple currency and rate swap has been taken in Swiss franc. Maximum was a Swiss franc, and there was also euro and other currency. Well, people have actually burned their head. So you should be very wise while choosing your strategy also. The next one is very simple route, which is a EFC account. If you are having a natural hedge and if you are having some confirmed payment available in the future, follow the EFC account route. Another one, which is a flavor of the market as of now, is going for a discounting, factoring of your account receivable and discounting of your letter of credit, whereby you can convert your forex risks immediately and convert your money in the INR. And the last one and most important is avoid speculation. As I said, don't try to earn from the forex risk management. Try to neutralize your forex risk. Having said that, I'm about to end my presentation, and life is inherently risky. There is only one big risk you should not avoid at all cost, is not taking any risk and doing nothing with the risk. We have taken various risks, and that's the reason we are living this life and we are sitting across to each other at this point of time. One important point someone is saying in the risk management, if you are taking a risk, take such a risk that you have been take a bigger risk so that government is going to bail you out. At least you know that there has been instances like Yes Bank, there has been instances like Air India, there may be instances like few markets. I don't say any name. And when your bosses are asking, so sometimes we feel that our bosses are too optimistic and asking us too much. I have heard some bosses is saying, I need all specific unknown risk to be tabled to me. If I'm going to table you unknown risk, how it is an unknown risk. So that's how it is. Now I'm giving you the winning mantra of managing the risk, which is very simple. Don't do anything wrong today. Don't do anything wrong tomorrow, and repeat the same. Thank you very much. With that, I end my presentation.
Thank you, Maulik Bhai. I think that was a beautiful presentation from the point of view of company. So I meet a lot of companies in Gujarat. Harsha, I think, is having one of the best currency hedging policy. They have implemented it marvelously. So I request anyone in the public, in the participants, if they want to ask some question to sir. Yeah, sure.
Maulik, Kunal.
Yeah.
Do you have any exposure to Russia, and have you done INR deals with them?
Yeah, we do have exposures to Russia, not significantly. And fortunately, we have not done INR till we are discussing, and it is on a very advanced stage. And we could get some local banks like Yes Bank and some other state banks who can convert the. Now we have started dealing with them in the local currency of Russia, and we are dealing with the Yes Bank and SBI for the conversion. But we are very early stage of converting INR with them just to avoid the again forex risk. Thank you.
Any other questions, sir?
Do you think that forward cover is a proper tool to cover the risk management, foreign risk management?
I think, sir, that is the best tool, forward cover. If it is meeting your costing rate and budgeting rate, I think you should not try anything else, because ultimately it gives you the bottom end, what you want to achieve, and plus premium also. So that is the best strategy. In Harsa, we have exposures of around 400 crore exports, and which is going to be 500 this year. And we follow 12 months rolling forward as a strategy for our 50% plus exposures. Fortunately, because of our pricing methodology, we are covered for our rest of the 50%. So I'm not saying this is the best strategy to be followed for your case, but as a case-to-case basis, despite of all the market product available, forward is still a pure vanilla product. Yeah. Okay. So what if you have a confirm order, we do a rolling forward strategy, because in forward also, if you take a shorter forward period, you will have a lesser premium unless you go for a longer forward premium. So you have a better premium available if you go for a longer duration. And that's what we follow as a 12 months rolling strategy, whereby we can earn a better forward premium. Being exporters, and if you don't have any payment liabilities required there, you don't have a natural hedge there, I suggest forward is a better way.
Thank you. And I would request everyone to note down their questions specific to Mr. Jasani. We will take them up after the second presentation. So I would request Mr. Maulik Shah, CEO and co-founder Almas Risk Consulting, to start his presentation. I'll just share his brief profile before that. So Mr. Maulik Shah is the co-founder and CEO of Almas Risk Consulting LLP. He has 23 years of experience in senior financial and treasury role in Mahindra and Mahindra Limited and Rosy Blue, a leading diamond company. He is a fellow member of Institute of Chartered Accountants of India, rank holder, ICWA and CFA. He has represented various panels on foreign exchange, treasury, and risk management. At Almas, he is responsible for executing business plans, creating growth opportunities, and building a relationship. I request Mr. Maulik Shah to please start his presentation. Thank you.
I have decided not to present.
Okay.
Because he has covered most of it. So thank you very much. Firstly, GCC, Gujarat Chamber of Commerce, NSE, and all of you for this wonderful opportunity that pulled me from Mumbai to Ahmedabad. It's indeed a pleasure to come to the vibrant city and vibrant state. So thank you so much for the great opportunity, but I actually mean it. So I'm not going to run through the presentation. I'll actually speak. I have few slides, but and it's one of the greatest coincidence that we have Maulik. So I'll keep praising Maulik, okay, in the process. So one of the things that he has actually done, and I was just going through the presentation, all of you actually can take the presentation slides, each and everything. Okay, I can tell you as a practitioner over last 10 years, working with multiple companies and industries on different scales, be it $1 million or $1 billion, everything that he has mentioned is actually a perfect rule book. If you can implement all of it, I mean, and this is coming from an experienced market practitioner. So I would rather take that slides and presentation from you and probably copy paste from some of my clients. But yes, I think some of the basic principles of risk management that he has covered, if you really practice it well, believe me, I mean, and I will pick incidents. Okay, so I'm going to talk, and I mean it that I'm not going to run through the presentations because a lot is getting covered in what I'm going to deliver. And I'll tell you a very classic case study. By the way, you will have to tell me how much time do I have, Ankit? Because if I start, someone needs to end me. So how much time do I have? No, enough nahi, bolo, because मैं तो
Till the time we are hungry.
Yeah. 20 minutes.
Okay, lockdown में Sterlite का treasurer का मैं so we had a webinar. So you know, most of us went through the webinar. There was no physical conference like this, and I was moderating Sterlite treasurer. And then I asked him, not Sterlite, sorry, Hindalco. Now Hindalco has a very strong risk management practice and policies. And I'm referring now to a commodity hedging, okay, the oil hedging part. Now, if you recall, oil during the lockdown had literally crashed, and some of you might recall it had gone to a negative. Remember? And Hindalco is a long future. उनका जो hedging के लिए उनको orders मिलते हैं, उसके लिए उन लोग future में long करते हैं. So imagine if you have a oil which drops below, my hedges turns into negative, right? And it is so much negative that you have to pay mark to market. And during the same period, I was moderating a panel and I was asking him that, don't you think you really need to revisit the policy? Because you are running a hedges and you are just paying mark to market. And that guy said, the treasurer, he said the policies, and one of the points that you covered in your presentation, is supposed to be followed consistently. At Hindalco, things that we have really learned, and he just cited an example of 2007-8, when we had a similar crisis. He said, whatever we have decided as a policy matrix, that gets followed irrespective of market movements. And that is really the key to success. Because I have seen many corporates who starts with certain objective, but when the market moves, suddenly there is a rethinking. Should I or should I not? Should I follow this or not? Because there could be a cash flow impact, there could be a margin impact. In fact, similar example, you can talk about Titan. Titan does a gold hedging. And in those days, gold hedging, when they do, which means that Titan as a company is holding a gold inventory. So what does hedging mean for them? They have to short on the exchange because I'm holding an inventory, gold head. So if the prices drops, it is a loss to me as a company. So what do they do as a hedging? They sell the equivalent of gold on the MCX. Is everyone able to connect to this? Yeah, so I have a gold. Now remember those days when gold shot up from 35-40,000 to 50,000. So I have an underlying which is gold and I am short on the exchange, let's say 38,000, and the price goes to 50,000, which is almost 20%. Now my MCX will literally bleed. I will have a margin call. And they had a quarterly review, and all of you would know that Big Bull is one of the big investor in Titan. So in that quarterly June 2020 meeting, he literally questioned the CFO that how come you have such a quarterly loss and all. And he literally pushed both CFO and CEO, and you should read that transcript if it is available. They said the same thing. All the explanation apart, but as a corporate, as a Tata, as Titan, we would never ever deviate from the policy. So we have taken a call that we will remain 100% hedged on my inventory and that we will follow irrespective of the market fluctuation. Now, just two case studies, point to note that whatever you do, you may even decide not to hedge, which is also fine, but follow that consistently. Make sure that whatever you do that year after year after year. Let the market movement not change your approach to the risk management. So this was a two connected point I thought I'll just share. What I really want to cover is what Apurva bhai talked about. Shu lage chhe, right? And this is one question. Though I say we are a risk consulting firm, but invariably the question that we are asked is shu lage chhe? Market shu lage chhe? Dollar rupee kya lage chhe? 85 lage chhe? 80 lage chhe? So definitely I'm not going to give you an answer if you're hoping. But what definitely I intend to cover is the conditions behind the market movement. So one of the things that I'll touch upon, and between me and Maulik, we will probably coordinate that he is really talking about risk management. So I have a piece of presentation which is on the risk policy, hedging and all, which I'll skip. I'm not covering it, but I have another session which is on the market outlook. So I'm going to take you through where we are, what we are looking at in terms of the macro picture, the global outlook, the Indian outlook. And I mean, I'll leave it for every one of you to decipher whether dollar is going to 85 or 80, which I'm sure if that's a question that you have that is making you sit here, probably you will find an answer. Okay, so let's go through this process together. So as they said, you know, to even assess or to check where you go to, you examine where you come from. So all of you in different businesses, different markets have experienced volatility, be it currency or a commodity. Now, this has been the scenario for the last 6, 7, 8 months. What I'm going to do is take, let's say, a step back, put ourselves back into 2020 or around the lockdown period. What really happened? Touch upon it briefly. Look at our current conditions and then look at where possible, probably what are the possible ways, possible unfolding of the future that we can really look into. So in the next maybe 5 to 10 minutes, I'm just going to sort of cover global, then India, and then come to the currency. And then we will talk about probably the market view and then some of the policies and the practice. So let's say, let's go in the past. We saw pandemic, 200 countries locked down. And most of the governments, especially the Western one, not the emerging market, took a very, very bold and aggressive step, which is printing money. And most of you here in this room who are in the market, they would know that's really 10% of GDP. Unthinkable, unprecedented. When you're talking about 20 trillion economy printing 2 trillion, no one would imagine this is something that a central government will do. They did that because they also saw Last 10 years, they've been doing the same thing. Nothing happened. No accident happened. So they printed. Now, this was a money in the pocket of the consumer, be it US, be it European companies or any Western countries. What we did, we printed just 2%. So 260 lakh crore, if that's our GDP, roughly 240, 260, we printed 2 lakh crores, which is 1 or 2%, not more. What really happened when you have such a flood of money in the system? Obviously, there's going to be like a huge demand lend push to the commodity price. Now, of course, we were in the lockdown and we thought this is one way in which to save the world. Fast forward, we are in 2022 and we had a Russia-Ukraine, which was again, like he said, no, unknown risk. So this was a big unknown risk to the market. While the first pandemic and the measures led to the huge demand push, the Russian-Ukraine crisis led to the huge supply push. It disrupted the entire supply chain. I'm sure if you are in the business, you would have experienced it. Suddenly the freight costs shot up. Then you couldn't even supply or procure the material on time. So this was all the pressure, but it was all supply led. Now combine these two factors and 2022 mid, we are looking at a hyperinflation. It's like આ વસ્તુ થવાની હતી અને એને ટ્રિગર જોતું હતું અને રશિયા યુક્રેન ક્રાઇસિસ ટ્રિગર બન્યું because you already had enough liquidity in the system and then this happened. All that it had to happen is just shoot up bomb, and that's really the major blow to the entire world economy. Now all of this leading to a hyperinflation. Same central government, the Fed, which denied that inflation is temporary, they did that almost for 3, 4, 5 FOMCs. Inflation temporary, base effect normal didn't happen, and they had no choice but to start increasing the interest rates. So in just 1 year, the interest rates, which was about 0.5%, goes up to almost, now we are at 4.5%, 5%. Now this is what Achal say. Okay, what you slide karish, but tame mari sathe rejo. See, why I don't like this presentation is because then you shift the focus here and you are not with me. Okay, so make sure you remain with me. Kai chart છે, data point છે, બહુ જોતા નહીં ત્યાં આગળ પણ. So if you really see the data points since 2020, 21 and 22, this kind of upswing in the inflation, this reminded the central bank of 1970s, and central bank having realized that you can't do anything with the inflation, it is here to stay. All that they had to do was two things: increase the interest rates and also unwind the quantitative easing that they had done earlier. Remember printing the money? So they had to take back the money. They call it QT, like a quantitative tightening. Impact is very simple. J market flush with liquidity hatu, easy money hatu, 0.5%, 1% ma loko decision leta tha, chalo invest kariye, startup ma aapke loss funding kariye, badhu jan unwind gradually, not over time. But that's really the sudden shift in the mood. If you really see that financial conditions, from a very easy financial conditions, you came to a very tight financial conditions. Now business does extremely well when you have very, very conducive financial conditions, which probably wasn't there post what we have seen in the last. Now naturally you are hitting the demand, and US central bank objective is very clear. The demand mare literally kill karvi છે. So they know that it will have a counterproductive measures, but they kept increasing the interest rates. They know that it will put pressure on the demand. We might go into recession. I will keep doing it. Now, this is where the Western dichotomy is. This is where the entire Western world, demand, I'm going to reduce because there is enough liquidity and I want to bring down the inflation, and there is a quantitative tightening. Now let's look here what's happening. So all of this drama that happened in the Western world, now let's come to India. So this is all the global picture. Now today maybe US is good, but you look at the Western economy, the European ones, apart from the demand and the pressure on the economy, the Russian, આપણે ગુજરાતીમાં કહે ને કે યુરોપિયન્સ તો આખી લડાઈમાં વગર વખતના મરાઈ ગયા. એટલે યુએસએ તો પોતાના શેલ ઓઇલ પ્રોડક્શનમાં ઇન્ડિપેન્ડન્ટ થઈ ગયા, પણ યુરોપ dependency on the oil was so strong that it had to really take the brunt of the entire war. And a high energy price, there is no way they could access the oil. They were then, in fact, there is a one data point which shows that European purchase of oil from US increased after this Russia-Ukraine crisis. And look at US. When the entire thing was happening, US was very self-sufficient. They had their own shale oil productions. So they were not never ever, they really did not face this entire brunt of the war crisis. So it was a European which took a blunt, and of course it's reflected in the currency. Euro from the highs of 120 plus came down all the way to 0.95. So those are all the impact on the European nations. But the story of DM, which is a developed market, by and large remain under pressure. Low demand, high recession. Europeans માં બીજો પણ problem છે, aging population. So, unlike a US, which is really a vibrant economy because of the immigrants and all, but Europeans have a different problem of their own. So all of that combined, we are now looking at what really happened in India. Now, India માટે એમ કહેવાય છે કે none of these things that happened, we caused it, but we are just a accidental beneficiary of what really happened in the world economy. So first, when there was a print of money, suddenly the export-led sectors started growing. So you had an export boom in that year. So a commodity price crashed, export picked up, favorable to India. Now, when this crisis happened in Russia-Ukraine, suddenly if you look at around in India, there are businesses which are doing phenomenally well. People are talking about China plus strategy. So you have a manufacturing exports or manufacturing activity picking up. Government is pushing for the PLI schemes. So suddenly the Indian macro are looking so positive. Now in this entire last 2 to 3 years, one country which has really benefited significantly is ours. Again, I'm saying we did not cause it. While we did, to a large extent, government did what they did, but because of the global factors, we really benefited. Now look at what happened in India, both in terms of inflation. Probably today, for the first time ever, the inflation in US is far higher than what it is in India. So we have around 6.5 and 7 now, which is even dropped, but US is still high inflation. Now, this was again unthinkable. So we are used to 6%, 7% inflation, but US they are not used to it. And a inflation and a higher interest rate, after that 6%, 7% interest rate is still okay. Now, all of these things, when it is really happening, we are seeing a significant momentum even on the fiscal front. And I'll come to some of the statistics just to highlight. This is one data point that just shows that in the latest FOMC, temporary that's not going anywhere. Interest rates je niche nikao che a 1st February and then 16th February. So the market expectations of the Fed rate hike or the curve has really shifted up. What it means, and I'm sure those who are following the treasury market, the higher for longer is the new buzzword. Okay, interest rate high rese and a longer time mate rese. Jo a situation che, the financial condition will continue to be tight. Now, another thing, and I'm just highlighting some of the data set, something which is a kind of a hanging sword, is the Japanese government commitment to control the yield curve. And again, not to get into a very complexity, but Japan for years, ત્યાંના interest rate એ લોકોએ steady રાખ્યા છે. 0.25, 0.5% થી વધારે એ લોકો થવા નથી દેતા. એ થાય તો government intervene કરે. And when the government intervenes, it means that you are ensuring that interest rates remained very low. હવે એ ત્યાં પણ inflation છે. જે રીતે યુએસમાં છે અને એ લોકો ઇન્ટરેસ્ટ રેટનું મેજરલી કર્યું, એવી રીતે જાપાનમાં પણ કરવાની જરૂરત છે, but they are not doing it. At some stage, they will have to give up. Now, if that happens, you have another crisis in the financial market. So somewhere in May and June, when there is a current governor, J change thase, kadach that becomes another point of crisis. Now, point to note that yes, this can happen along with, I think there's a debt ceiling time also, which is another factor. So I'm just highlighting some of the kind of events which can further put stress on the financial market. Now, આ બધાનું આપણને શેના માટે કે અલ્ટિમેટલી તમે એક્સપોર્ટમાં માર્કેટમાં હો કાં તો ઇમ્પોર્ટ કરતા હો તો ઇટ ઇઝ ડેફિનેટલી ઇમ્પોર્ટન્ટ કે એટલીસ્ટ માર્કેટમાં શું રિસ્ક છે જાણો એન્ડ દેન મૌલિકે જેમ કીધું એ પ્રમાણે એટલીસ્ટ ફોલો ધ રિસ્ક મેનેજમેન્ટ પોલિસી. મારે એક ઇન્ટરેસ્ટિંગ ડેટા દેખાડો છે અને એ છે કે ઇન્ડિયન મેક્રોના રિલેટેડ. અંકિત જસ્ટ હેલ્પ. સોરી. So I earlier talked about the Indian fiscal. Just a point to highlight. એક ટાઈમ હતો કે આપણે ગવર્મેન્ટ જ્યારે બોરો કરે એટલે ગવર્મેન્ટ સરવાળે ખર્ચો વધારે કરે છે ને ઇન્કમ ઓછી છે, બધાને ખબર છે. પણ જે ખર્ચો કરતી હતી ને ક્વોલિટી ઓફ ખર્ચા વોઝ મોર ઓફ રેવન્યુ. ઇન્ટરેસ્ટ સબસિડી આપવી હોય કાં તો એટલે બેઝિકલી મારે ઘર ચલાવવા માટે બોરો કરવાનું. આપણે સિમ્પલ ગુજરાતીમાં કહીએ તો મારે ઘર ચલાવવું જ મારું ડે ટુ ડે ખર્ચો કરો તો પૈસા છે નહીં તો હું બોરો કરતો હતો. અત્યારના ફર્સ્ટ ટાઈમ વર્ષમાં લગભગ એ લોકો 15 થી 16 લાખ કરોડ બોરો કરશે. They will borrow about 15 to 16 lakh crores. The total expenditure on the capex is about 10 lakh crore. Now, when you are spending money, so all of us, when you borrow for buying home, it is good, right? Because you are building an asset. So you are incurring interest on the debt, but for borrowing an asset, which is for future. Government, because paisa nata, so they never did that. Now, this is a very strong indication. Maybe because of the compliances or because of the way local industries are performing, direct tax collection, 25% no growth. Again, unthinkable. GST collections, 1.5 lakh crore per month. These are all some of the strong fiscal numbers. Today, government has, or a central bank has enough power, enough weapons, enough tools to really influence the economy or put that into the growth trajectory. Now, those are all the things which is what is shifting even the India fiscal and the ability of the government to really influence the growth. So another factor that I wanted to sort of, touch upon is he already said we are borrowing, or rather we are buying oil from Russia. This is one data point that confirms significant buying. I think someone asked about the ruble and rupee. I want to touch upon that. As I said, so I just wanted to show you one data set which is very relevant. Now, understand one piece, that whenever there is an India growth story that emerges, the negative side of the India growth story is the consumption of Indian or the growth of India is largely import led. So when you grow, there is a pressure on the macro, external macro, which is reflected in the current account deficit. So imports are more than exports. Our consumption is more. Even અત્યારના તમે જોશો તો જે પ્રમાણે ઇન્ડિયાની ઇકોનોમી ગ્રો થઈ રહી છે, તમે એમ કહો કે ઇવન ટોપ 5% કે 10% જ રિચ પણ જો કન્ઝ્યુમ કરે. So today, luxury goods segment, look at Ethos results, look at the Mercedes, BMWs and Audis no waiting period, even their sales, it is almost double. So these are all the imported consumption that India ends up making it, especially when we have a high imports or it's a growing economy. So it is really, the growth comes with this baggage. Now, what really happened in 2021, 1920, we had a current account surplus because the recession, the demand was low, but gradually we saw Indian economy doing well. And today we are proud of that we are doing well, but it created a pressure on Indian macro, which means the first red line, if you see merchandise surplus, the goods minus imports, last number is only for half year, by the way, 152. So annualized is $300 billion. So we saw a number of $102 billion of FY21 moving to 189 going up to 152 for 6 months, eventually we will end up at 280 to 90 billion dollars. Now that's really the increased trade deficit. However, the silver line is the another red column, which is the service exports. Now this is probably one of the best case study or an example that look at the way service exports have grown. We were at an average 80, 78, 80 to 85 billion dollars for last 3 years. And suddenly in FY22, we are looking at 89 going up to 108. This is the service export number, and 108. Again, mind you, 66 is half yearly. So you're looking at now 122, but actual projections after January print is almost $147 billion. So we are at a 40% growth of our service exports. Now that really is to a large extent kind of compensating for a higher trade deficit. So that's another silver line. Now what really we are looking at, especially after January print. Now I'm sort of trying to put the pieces together and come to the currency view and kya lagta hai. So what we saw, now I'm kind of specific to currency. 2022 February onwards, the pressure that it had, one is inflation, the other is higher interest rates. As a country, India, one point that Maulik covered, that on the view of the currency, demand and supply matters a lot. So on one hand, you have a trade account where the demand is more than supply, demand for dollars. At the same time, capital supply, which was financing your trade demands, also got impacted during the high interest rate period, which is a capital flows into the country. So we as a country are always wanting capital flows to finance a trade deficit. Now, both factors put together was a clear pressure between Feb, March till about December. January numbers is probably an outlier because of the past trend that we saw. But if that becomes a trend, which is what we are seeing it, then moving forward, we clearly see that probably on the trade front, the pressure is not so much. Simple monthly statistics તમારે capture કરવા હોય તો $20 billion નું trade deficit અને જે print થયું IT exports or service exports is about $16 billion, $16 billion. So $4 billion is not very significant to finance. Even there are private transfers. So that probably is a silver line if that becomes a trend. Plus, we are hearing a lot of FDIs being lined up on account of the PLI, the capital infrastructure related investments that will support. So we are looking at moving forward next about 6 to 12 months scenario. And I'm talking about maybe some funds will always wait for the election outcome. But by and large, looking at the growth, the capital will flow in. India is probably the fastest growing so far, and it will be in time to come. We will continue to attract capital flows, which ideally should support our overall macro. Now that's one piece to keep it in the background. Having said this, interest rates picture in US is not going away till we have a higher interest rate. The only trigger which probably will change the course of dollar index, and dollar index is one index which most of the market participants follow, is when probably it takes a pause. And there are market gossips all around that whenever there is an indication that dollar may not increase, or the Fed may not increase the interest rates, suddenly there is a turn and euro gains. But these are all the things which eventually the Fed members comes up and negates it. So we are not sure, because that's another unpredictable item. Till the inflation is low, we are not looking at interest rates under pause or reduction of the interest rate. Market expects by 2023 end, there could be a one rate cut. And that's what is reflected in the interest rate curve cycle in the US. Now, that said, I wanted to cover in my presentation one point that you highlighted. US rate cut. 23 December. That's what market is expecting right now. 23, 25 basis points. First rate cut, and 24, there could be another follow. But these predictions are with every FOMC. As you saw the curve on the first chart, keep shifting. So as of now, the market discounts a rate cut by December 23. Yeah, so I wanted to so ruble and rupee, I think an important thing to understand in ruble and rupee mechanics is India and Russia has, earlier we had about $5-6 billion deficit with the Russian oil imports. That deficit itself has crossed $20 billion plus. Now, one of the biggest challenge which the regulator and the central banker have been facing is, what does Russian government or the entity do with the excess rupee which they will get it? So with every import higher than the export, and if it is in rupee, you end up parking rupee with Russia. What do they do with that? Now, of course, if you read 11 July 2022 circular, they have allowed investment of that into a government security. But who wants to take a risk? I mean, we are not fully convertible on capital account as a country. So no one more wants to buy an Indian asset, neither a government asset. So what do they do with the rupee? So ultimately, you will have to go back to dollar, if at all you want to convert into any other currency, because there is no rupee ruble exchange mechanism which is outside of US leg. So it has actually become a non-starter. So only the export leg, which is Sri Lanka and Bangladesh, in rupee has really picked up. But the import side, and today I think India has deficit with most of the countries. So this can probably work when there is a balance import-export. Because I give you rupee, you give me rupee. So you use, like it happened in case of Iran, that UCO Bank deal, because there was a clear need at the country level that I need those food, so I don't mind giving you oil. So food for oil, and then they could peg the rupee related transaction, which is not the case here. But still, having said this, there is definitely, I mean, in fact, there are also talks of using yuan as an intermediary. So rupee ruble, there is no direct trade. It has to be through dollar. So can we use then the yuan? So that's another possibility, and yuan and ruble can be traded. Or of course, there are very market gossips. Are we looking at a gold standard being reinstated? Impossible, but I'm just saying. So these are all the things. But one thing which we have seen as a trend is central bank across have been buying gold in the last. So one big trigger which is an offshoot of Russian-Ukraine crisis is the sanction. And US government or leaving the restriction on the FX reserves. So by and large, you are seeing a trend which is emerging that the central banks have diversified their FX reserves, and those are the statistics which are very strong into gold. So the gold is definitely one commodity which is here to, I mean, which you can always use it as an investment class, because there are the central banks who have been buying gold. And I know I'm rushing into it and I don't have a time and I have a few slides to cover, but let me pause it here. Let me take your questions before even I think of what I want to deliver. I'll take a pause here. And I think tomorrow પણ એક બીજો question હતો forward contract ના option. એક જ piece એમાં કે, and this is, see, we dealt with some of the textile exporters. એ લોકોના કેસમાં peculiar શું હોય છે કે હું order level પર લઉં અને હું forward contract book કરું. And this exactly happened when 75 નો rate હતો. By the time હું dispatch કરું અને rate 75 નો 82 થઈ ગયો, એટલે મારો foreign customer કે મને 10% discount આપ. And this is the real, it's a buyer's market. So what do? તમે forward contract લીધેલા હોય, it becomes ineffective. So is there another alternate? Maybe option could be an alternate. Premium pay કરી દેવાનું. હવે premium pay કરો અને પછી rate ઉપર જાય તો ઠીક છે. That's a cost that you have to incur. But these are all, like he rightly said, you have a business specifics. Like there is no one straight answer કે forward versus option માં કયું better છે. તમારો business ની requirement જો બહુ certain છે કે cash flow આવવાનો છે, તો forward is the best. Nothing beats the forward. પણ જો business માં uncertainty હોય, તો definitely option જેવા instrument you can use it for your risk management. Yes, sir.
So somebody's done that, or it's fine.
Say that again. Couple of years open meaning?
No hedging strategy. So
as I said, there are many. So same Titan no exact opposite ko. TBZ traditional jewelers है. વર્ષોથી gold hedge નથી કરતો. So that is another extreme. But typically the investors, when they start looking at, they really have started asking the question that am I betting on gold or I'm betting on a brand?
That's why you're doing it continuously for a couple of years. So
Yeah, so
that's the
ultimately,
success to it.
so you can follow, and there are businesses which does this, that મારી મૂડી ગોલ્ડમાં જ છે, એટલે હેજિંગ નથી કરતા, જરૂરત જ નથી ને, મારી મૂડી જ ગોલ્ડ છે. હા, એટલે મારે તો હું ધંધામાં પરપેચ્યુઅલ રહેવાનો છું, તો મારે શું કરવા હેજ કરવાનું. અને પ્રોબ્લેમ થાય એ લોકો પબ્લિક ડોમેનમાં જાય, કારણ કે પછી ઇન્વેસ્ટર જે છે ને એને ચોઈસ છે. ટીપીઝેડ પ્રાઇવેટ હતું ત્યાં સુધી કોઈ પ્રોબ્લેમ નહીં, તમારી મૂડી ગોલ્ડમાં છે, તમે પબ્લિકમાં જાઓ તો ઇન્વેસ્ટરને રાઈટ છે ને કે મારે ગોલ્ડ પર બેટ લેવી કે બ્રાન્ડ પર બેટ લેવી. એટલે ઇટ્સ અ ડિફરન્ટ પર્સ્પેક્ટિવ with which, so the more wider spectrum you represent. So very good. Yeah.
Couple of years. So post COVID, we have taken a call not to have EBR, PCFCs, and we have things to keep the things open. We have doing it for 3 years and no issues.
Yeah. So as I said, see, prudent risk management is whatever you do, follow consistently. There are many illusions, myths in the market, which I actually have in the second session of the, how do you distinguish between the risk management and the speculation? એટલે કોઈએ 80 માં 81 નો ડોલર રૂપિયા હતો અને મેં હેજ નહીં કર્યું અને ડોલર રૂપિયા 83 થઈ ગયું, તો ઓપોર્ચ્યુનિટી પ્રોફિટ થયો, પણ ઇટ્સ એન ઓપોર્ચ્યુનિટી પ્રોફિટ. પણ 81 નું થઈને 79 જતું રહ્યું તો એ રિયલ લોસ છે. હા.
Well, the big thing happened 4 years back. But finger burned, we have not gone on that route, but SBI had given an FCNRB open route.
And you did not hedge. So એમાં સ્ટેટિસ્ટિક્સ શું એ પણ કહું long term માં. And this is again, see, dollar rupee is about 2 to 3%. Now it is 2.5% premium. Earlier it used to be 4%. So on a long term, let's say for example 5 years, you haven't hedged, the premium is 4%. So as long as 20% movement is there, then you are indifferent. So in the long term, dollar rupee has depreciated, or rather rupee has depreciated by about 3%, to be precise 2.5% in 10-year cycle. The premium is average 3.5%. So 1%, so as an exporter, if you have been consistently hedging, like he's saying 12-month rolling, you have gained 1% extra. As an importer, FCNR borrowing, you have saved 1%. But problem comes for such time when suddenly in 6 months you see 10%. And then if you have a multiple stakeholders, if you are a private limited, no one questions. But if it is a equity, people will question what is the prudent risk management policy. So I think the wide spectrum of investors and the stakeholders that you have and you are accountable to makes inward looking your, the entire approach to the risk management. Private ho to main kidhu na capital chalse gold ma. Yeah, sorry, happy to take the questions. I'm just flipping my slides.
We can finish the presentation and then we can have the questions all together.
Okay, so let me just see what all things I have not covered. See, another element, while he covered most of the risk management practice and policies, from the experience, what I observe is that most of the entities ignore the indirect forex risk. So I mean, I can give you an example. One of the leading glass manufacturing company, which is my client, when we did their initial induction on board, we studied that policy and process. They are exporters. Now, what they did not include, he also highlighted in natural hedge. So what is natural hedge? That you have an export with certain lead cycle or 3 months outstanding. You also have an imports, but there are imports not direct. I'm buying locally, so I'm consuming products which are rupee denominated, but has a parity with the exchange rate. Now that is something that you need to include when you are assessing or when you are identifying the risk. So that's one piece, and there are many. I mean, most of the commodities are on an exchange rate parity. So when you look at your business, definitely put those items, though it is rupee denominated purchases, but put that under your exposure. If you don't have an export, it becomes your import export. So that's so the whole purpose is take an holistic view of the business. Yeah, this is what I said, that you are at 80 to 70, you hedge at 83 and then it goes to 85. Then they say, okay, मैं तो loss કર્યો. In fact, આજે બપોરના જ એક very sorted businessman I met, he is very clear that when I have raised my order at 82.70 and I'm getting 83.01, I don't even care whether it goes to 84 or 85 because I have protected my margin. But the problem comes when you start thinking, "Arey, ye to nuksan ho gaya." Postmortem. And the real loss is this, that if you haven't hedged and it goes to 82. Now, this is always going to be a balance. Risk management, as he covered, it is like a risk and the opportunity. And it is always about balancing. Why it is about balancing? Because you have a third element of competitive advantage. So, and I make this comment that there is never ever a perfect hedge. I mean, I may call that whatever I'm doing is a perfect hedge, or like I have received an order, I'm hedging it. But who knows, my competitor, he's a smart player and he really outsmarts me. I mean, in terms of the pricing, he may do that. But if he also plays smartly year after year after year, then yes, I have a problem. I need to relook at my hedging policy. So there is always a competitive advantage, which one needs to really look at it. So which probably makes the entire hedging process much more intuitive and also scientific, both ways. So it's a balanced, yeah. So I think this is where you need to focus on, ensure that your EBITDA is positive, no matter what the fluctuation of the exchange rate is. If you're able to do this, and more when you have external stakeholders, this is another angle I just wanted to touch upon, because one is the profitability, you protect your business margin. The other is the accounting impact. Because accounting impact is driven by the rate at which you book the invoice, the rate at which you realize the money. Now, again, there are different practices, because there are companies which will book the invoice at custom rate or RBI exchange, RBI rate or a card rate. So when you look at the volatility on accounting side, you may not be able to connect that with your profitability. So again, I mean, you have to be clear that are you in the game for showing FX gain or loss on the books or protecting the business margin? And both may not be same. That's something that you need to be really clear about and reconcile those numbers. Hedging tool he covered, OTC options I talked about. There's a difference between NSE. In fact, NSE should be talking about the exchange. Ankit, that's your forte. So one thing which I can definitely say, especially for the MSME, because I know when we deal with the bankers, they do charge. Now, of course, there is no delivery on the exchange. So to that extent, you don't know. But if you really want to protect your as small as $1,000, you can even hedge. And in fact, that's if you go to the bank with $1,000, they will quote you ₹1 off. So, but in exchange, it is the price is same, irrespective of the quantum. And both has their own pros and cons. It definitely provides a very liquid tool. The exchange, and both NSE and BSE have, NSE I think is a market leader, and they have really set up that as a very strong risk management exchange practices. They have both the OTC and exchanges, they have pros and cons depending on, and of course I see many MSME especially find challenge in terms of getting the margin. Bank tamne app mein karo to 10% charge kare, whereas here you get it at 3%. But with of course M2M margin. So you'll have to really evaluate your available options. Yeah, I'm not going to, this is all done. Yeah, I think most of you are availing, I guess. If you are an MSME, I'm sure you are availing a subvention benefit that the government gives, 3% subvention if you are a below 250 CR local exports, and that allows you to borrow in rupee, which is pre-shipment and post-shipment both. Use the forward contract. Effectively, you can actually finance your entire business at what? 8 or 9% minus 3%, say 6 minus 2.5. So almost 4%. So at 4%, even in today's world, when the overseas dollar rates are at 5%. So you are able to finance your business at 4% using the interest equalization scheme if you are an MSME. Thank you very much for your time and attention. I'm completing the presentation, but yes, happy to take your questions.
Thank you, sir. So with now, I open the panel for any question and answers that the audience might have. So If anyone has any questions, just raise your hand. We'll send across the mic to you. I'm sure.
Good evening, sir. So question to Maulik, sir. So for last 1.5 months, we can see the dollar index got, depreciated from 114 to it does to 98 or 97. But rupee ने sir उतना movement नहीं दिया उसके सामने से. Can you just throw some light on that part?
See, I think it is common for the market participants to link rupee movement with the dollar index. However, if you see while in the long term, yes, but in a very short term, you will see a period of uncorrelated movements. And this has been the one case, both when dollar was appreciating and even now when dollar is appreciating. And that can be reflected, let's say in Euro INR, GBP INR. If you look at standalone Euro INR, you saw Euro INR drop from 92 to 78, 79, and now at 89. Likewise for GBP INR, which is nothing but the INR strength or a weakness related to the respective currencies. So I think one simple answer to your question, that INR today is liquid against all the three major currencies, which is dollar, euro, and GBP. And each of them have their own trajectory to move. To just correlate the dollar index movement versus this is probably, yes, relevant in the long term, but not in the very short term. Also look at what is happening in the last probably 1 or 2 months that you covered. We have our own share of issues, both in terms of the market. In fact, INR not just against dollar index, because dollar index component of emerging market currency is not much. You look at INR against any emerging market currency, it is the worst performing currency. So be it Korean won, be it Chinese yuan, it saw a high of 12.20. So like dollar yuan came down to 6.72 and dollar rupee is at close to all-time high. So which made yuan INR at 12.20, which is all-time high. Same way Korean won. So I would say it is a rupee which has been one of the worst performer in the last 1.5 months against all the major currencies, including dollar index weighted, all those in currencies in the dollar index. So that's really the story of the last 1.5 months. And maybe as we have seen some last probably a week or 10 days, you may see the reverse trend also, because euro INR has dropped from 90 today at 87.5. Likewise, GBP INR at 99.5. So you're seeing that reversal of that trend as well.
Thank you, sir.
Yeah.
So one question that I would like to raise is that after COVID, the market timings have been shrunk. So before that, it was 9 to 5.
Yeah.
Now it is 10:30 to 2, depending upon the kind of customer that you're having.
3:30.
Yeah,
timing.
3:30. So
Yeah.
what kind of impact is that going to happen in the market to both the panel members, their perspective?
He is a corporate, so.
So basically the market timing has not much impacted on our piece as of now. Luckily, it all goes because of the major dealing we deal is with the bankers. We don't do the OTT platforms or the exchange platform as of now. And bankers are always cooperative, you understand, because of the exposures we have. But I'm sure that a change of market timing has an impact on the scenario where you have a short-term hedging requirement. And at that time, you might lose important days when you want to do a short-term hedging, especially in the fluctuating market. But what he has just said about the RMB or even Chinese yuan, or even for that matter, Euro and USD has been changing significantly. At that period, MSME will have a good hit. And I'm sure that regulation will look after it and make it align with the other markets.
Yeah, no, absolutely. And in fact, I think that way exchange provides time up to 5. And there was earlier a demand to extend the timing up to 7. Because typically, when the US opens, you have a higher volatility.
Exactly.
But that's a market participant demand. Regulators, क्या बोलते हैं, apply. जभी सुनेंगे तभी सुनेंगे. Yes. So.
Any questions from? Sure.
Hello, good evening, everyone. My question is for both Maulik Jasani and Maulik Shah. As you see, you are one of the large corporates here. So where do you see the currency for the next 5 years in the long term? As you see, the current past 5 years, it is like INR depreciated like 68. Now it is 82.7. So where you see the market for the next 5 years?
You want to take it? I think I think this is we need to be astronaut for that first, rather astrologer for that first of all. This is a case of anyone. If I say something today, I will say something else after 1 hour. So having said that, according to me, the next 5 years or even next few decades are India decades on the manufacturing front. And India will need quite a few FDI inflows and need to maintain the trade deficit, which he has rightly mentioned in his presentation, that we are a deficit country. So we can't afford losing or going the flow out of India, because that will hit us badly further. So according to me, we will not have a significant appreciation on INR. I see that there will be some push to the INR currency, and we will have an appreciation in some between 12 months to next 2 years, because of the elections is coming up, as well as the few other major economics are going to fund in India as a manufacturing hub. According to me, it will remain in the range bound of 80 to 83, 85 is a long term. Currently, if you see last 1.5 months, 83 has been performing as a very big resistance, and it will continue to be resistance because of the RBI influence and everything. Still, I would like to hear from this man. He's more expert than me.
Considering all the geopolitical tensions and the unknown risk, so
risk of recession also.
yes, risk of
add.
the recessions and continuous increase, Fed increasing the rates. So considering all these factors, where you see the market?
You definitely have a view. Tell me your view.
Yes, I was just talking to one of my client, and he was saying there has been like, increase in the rates. So it's like it all depends on supply and the demands, right? The Fed is increasing rates, and here we are increasing rates. So at this stage, the middle class, we can say, can't afford anything. So it's now demand is increasing. And again, after 5 years, it will not remain the same. As we see coming to the real estate, past 5 years, it was different, and now it is different. So again, after 5 years, we don't know.
So dollar पे किधर लगता है आपको?
He's asking answer from you.
Yeah.
That's a nice way.
So I will make the job simple. So this question, if at all I dare attempting it, probably I'll be the most stupidest person on the earth. But only factors that I would watch out for, and I think that's what I touched upon in my presentation, is the changing dynamics on the trade surplus or the trade deficit as today it is. China is a trade surplus, and therefore the quality of reserves that they have accumulated, which is about 3 trillion. Now we boast of $560 billion trade FX reserves, which is probably third or fourth largest. So we have numbers. Now these are all quality of the reserves is what? It's a capital flows that we have absorbed. There's no, the quality is poor because it's a liability. If it turn into a surplus, which is a current account that you should watch out for sure, there is a strong case for a rupee appreciation. Till then, forget rupee appreciation. All the more with a 2% carry. So earlier attraction was the forward premium, which is nothing but an interest rate differential between US and interest rates. I mean, US and India. Earlier it was 4%. So there is always a cushion that you had. Even if you go wrong, like I said, 3%, if a spot depreciates, you still have 4% premium. But today you don't have that cushion as well. So the attraction of a currency on a carry front, which is 2%, is negligible. Market moves by 3-4% in just 6 months. So you don't have that speculative interest. You don't have a strong surplus. There is no case for appreciation till you have a strong BOP dynamics or a current account dynamics, which January month, I keep repeating, January month, is it, and this is a question that we are asking our own self, we are doing that research, is it an outlier? Or is it a trend setter? If the January number is the trend setter, then you will see an appreciation much faster than, and plus PLI exports related will surely change the manufacturing export dynamics. So watch out for CAS, current account surplus.
If I just add over there, if you see the GDP breakdown, India is not at average of the industrial output or manufacturing output compared to other major GDP. He has mentioned in his presentation about the surplus deficit on service. Why? Because out of our 100 GDP, 54 is coming from services. 26 is coming from agriculture and only 20 is coming from the industry, pertains to manufacturing. If you see the other GDP of the developed countries, 30% plus is coming from manufacturing. So there is already a big delta. If we are going to bridge this delta, and it's not an overnight job, but the moment we are going to increase our industrial and manufacturing space, we will have a better appreciation on the INR. But it's not a overnight job or a next 6 months job. That's what I will add.
Yeah, please.
One particular observation, or let's say my own understanding, is that keeping dollar in the range of, let's say, 80 to 82 is more convenient for the government to promote exports. Likewise, when we are establishing the concept of Atmanirbhar Bharat, pulling out the factories from China and asking them to come to India, keeping the dollar in the range of 80 and 82 is always an attractive export oriented or export growth oriented scheme. So do you think that because government is making efforts to cut down on the oil imports by increasing the ethanol 10%, right, 20%, and likewise the other mechanisms, appreciation of INR going below 78 is a long time dead story probably? What is your view?
Yeah, I mean, you may be right, because see, technically we broke 77. So you're bang on when you said that 78 ke niche jana looks impossible. More on the fundamental front, see, this has always been a debatable point as to whether the currency leads to export competitiveness or not. So always there is an argument that you need a weaker currency to support the exports. The research, the data set has not given any evidence that higher exchange rate leads to higher exports. Had it been the case from a 60 to 80 or 70 to 80, we should have probably been already into surplus, which is not really the case because imports are also increased export. So there is no correlation of export competitiveness, while in theory, yes, but not really in practice as what we are seeing it. And he being an exporter, probably, I don't know what's your experience, but does it really lead to that competitiveness?
So not only the exchange rate will lead to that competition, but yeah, obviously because of the China +1, as well as now we are also seeing the Europe +1, this will be one of the attractive factors for them to go into the Asian countries, especially kind of India, where they have a stable exchange rate and they can have a stable supply also.
Yeah, and long term, as I said, technically 77 when it is broken. So you will see RBI will only come and buy at 78 because they have to also recoup the reserves that they've lost. No? You have a question.
Can you please provide the mic then?
Hello, sir. There is a buzz around reducing the dollar dependency about the government efforts for all. How much to factors that, and what are views on that basically?
So I'll give you the statistics. The central bank share of dollar has already come down from 72 to less than 60 now, which means the central banks deploying their the FX reserves into various currencies. That share has come down. However, the trade share, it continues to be very dominant at 88%. Now, it's a balance between efficiency and security, I would say, or efficiency and the alternate mechanism. The moment you switch to, so today, one thing which we all need to understand in the trade, same like Rupee Ruble when we talked about, the moment we talk about a regional currency block, say Rupee Ruble or a Korean won or a Thai baht rupee, the transaction cost is going to be exorbitant. Now today, luckily, because of the dollar as a single integrating point, the entire mechanism is very efficient. Now, it has its own plus and minus. So China talked about internationalization of yuan, never succeeded, and they had their own issues as a country. Then there are talks about, can there be a regional bloc, the China, India, and so all of these attempts are being made. eventually what happened after Russia-Ukraine crisis and US stand on the FX reserves and the sanction, there is even furthermore discussion on the topic. It might happen. How far it will succeed and how quickly, I mean, this we have been talking about last many years, is really a question mark, because people are still figuring what's the alternate, which is much more efficient. So, but one thing which I can tell you of late, and this is what we are seeing it in our clientels, that we have started receiving, so especially say yuan or non-dollar currency billing. So it's a gradual shift. Whether it is happening at a very accelerated pace, not sure, but shift is there. So you might see gradual dominance. I don't know how much more time, but again, let's hear from the market actual practitioner.
No, I personally feel, see, we are far away to say that we will avoid USD, because USD is a base currency across the world. And maybe according to me, it is only a good feel factor for our mind that we are avoiding USD. And it is the same like what we used to say 2 years before: avoid China, ban China, vocal for local. And you see the last year, highest ever import from China.
Yeah.
Right. So it's only a good feel factor. It's a long way to go, I will say. It's not the intent, but yeah, we can't say that we can overpass or we can sidelines the USD. We cannot, because it's a center currency. It will remain center currency. There is no other alternate, neither gold, neither yuan, and we are not still strong. We are still very weak as a INR.
Hello. Thank you very much for the such a knowledgeable session for the growing company. My question is, you have both the mentioned option strategy as a part of hedging or risk management. Can you guide would it be helpful as a long term, or as I heard, the option contracts are very risky, high volatile, monthly expiry, weekly expiry, and everything. So can you please guide on how option strategy help in risk management?
Okay, I will just take what we do and what one should do, rather, according to me. See, option is a giving you either floor or the bottom, one of the limit that will secure. So the moment you have a clarity about your budget rate or costing rate, what I discussed during my presentation, if you have clarity that this is the rate at what I will secure my margin, you should go for an option contract. So because you will pay some premium over there, but you have an open exposures and you have open opportunities available with you. Either it is a call option or a put option in that matter. But don't go for a various sandwich programs or make it more complex and adding multiple currencies into the same program. What we do in HRSA, although I said that we are doing 1 year rolling forward, we have recently started since last 2 years that we take a longer options, year 2 to year 6. And that's the strategy we have started, in which we are covering year 2 onwards exposures, but limited exposures. Our aim is to cover at least 30% to 40% exposures in a various tranches, by which we will have an option available with us. Thereby we will secure our base numbers. So we will not go beyond that as a recovery, below that as a recovery, and open end is available with us as a opportunity in the future. It's a premium paid cost. So you have to see that as a break-even point, including the premium. That's it.
Yeah, and another thing I can tell you in the market. So you would have heard about TCS, and I can tell you, Treasurer is a very good friend. TCS is one of the highest option premium paying company. So the entire taboo behind options goes back to 2007-8, when there was this exotic products and leverage product. Option per se is a very relevant and efficient tool, provided it meets your business requirement, like I said in uncle's case. So you have to really adapt to that. Option premium you can pay outright. You can do a range forward to reduce the option structure. Like he said, you can even think about the long term. These are all in fact, some of the policy we recommend very strongly, that if you are hedging, let's say you have 100 as a basket, diversify up to 20-25% into options.
That's what we follow as of now. But forward extra and forward range is available to a limited.
Yeah,
customer.
beyond 500 crores net worth if you have. But there are many other products that you can buy, simple put premium if you are an exporter, or a call premium, something like that. Another thing is exchange gives a very liquid option pricing. So you know at least the transparent pricing. Had it been only banks, you would always wonder whether the pricing is very efficient, not efficient. But exchange, or at least exchange may you get that.
Yeah, that's a
advantage.
good point of double checking. We use the ticker for that
Yeah.
to check the pricings, because obviously bank will have their own margin, will have their own delta. So you have to ensure that whether you are passing through delta or you are.
And
getting a better
exchange में तो weekly option है. Every week तो आपको pricing check करना है, बैंक बराबर देती है कि नहीं, आपके पास benchmark है.
And you do that.
Okay. So just one last question. I think we are overshot our time by quite a margin. So please.
But I must really compliment the whole 1.5 hour that really मतलब हम लोग को ऐसा अच्छा लगता है.
Hello. Sir, can you please tell me what is the biggest difference between we can do hedging into OTC platform or banking platform?
OTC is banking.
Like this is exchange platform and the banking platform. Sorry.
So sorry, what is the question?
Biggest difference between the both of the exchange and banking.
Biggest difference is आपको delivery है, मतलब inward and outward.
Yeah.
वो आप बैंक में ही allowed है, exchange में allowed नहीं है.
Yeah, but for the hedging purpose.
So hedging में आप अगर exchange में करते हो,
so
समझ लीजिए आपका export का order है, आपने hedging exchange में किया, $1 lakh आपने exchange में 1 month maturity में बेच दिया, तो जब भी actually banks में आता है तो आपको उसको square off करना है.
Right.
बैंक में अगर आपने किया है तो आप उसका delivery ले सकते हो.
Because normally what happened in the corporate people, they have been very hurdle about the pay to market place and the margin place. So they are making them like about the hurdle about the LC against the hedging and basically. So why people they're not coming to the action platform and
आपको
So there are a lot of, like they have previously mentioned in the presentation as well as discussion, there are a lot of benefits as well as there are a lot of shortfalls in both the platform. So I think it depends upon the corporate and it depends upon the case to case basis. There are MSME generally, they will find that the exchange will be much more transparent. They will be offering much more less margin. The larger corporates obviously will have a benefit on the OTC platform. So it depends on the case to case basis.
Because exchanges will not have a hidden agenda of making money out of your transaction, which can be there with the banking. So especially if you are a small size, you prefer to have both the exchange, both the option available with you. You evaluate it and take it the right call. There are some products which exchanges could not provide as of now, maybe statutory challenges or whatever. Say for example, they cannot provide more than 1 year forwards or options.
Yeah, maximum 1 year forwards.
Yeah, that was the one of the reason we also could not move over there. But yeah, if you are still having a limited exposures, you should explore both. At least you have something available. 2 advisor is always better. Second opinion is always better for a bigger surgery.
Thank you. So I think just Maulik sir said that 1.5 hour have went like jiffy because of the participation of the audience and the experience of our esteemed panel members. I think they answered almost every questions effortlessly today. So just before concluding, so I would request Mr. Apurva Shah, Honorary Treasurer GCCI, to provide the vote of thanks from GCCI.
On behalf of GCCI, I would like to thank Maulik Shah and Maulik Jasani, and especially NSE for hosting a brilliant session. We are happy as a GCCI. We hope to have more sessions where the crowd is indulging so much. It's one of the very few sessions where we've seen people sitting at 8 o'clock and enjoying the subject. Very rarely have I seen this. And we hope NSE guides our MSME members more. As chamber, we are here for small and medium. Large have their own. So I'm not saying that you don't come. We wish you come. But the medium sector needs this kind of services, the knowledge. That is where we feel NSE as part, and you've really done the job well. Thanking you once again for hosting us. And after this, we'll have dinner here. And we normally, when we finish, we have the national anthem. So we don't want everyone to wait for that. Thank you.
Thank you, sir. I would request Mr. Johnson Francis to provide the vote of thanks from NSE.
Dear friends, On behalf of NSE, first and foremost, I would like to thank GCCI for giving us this platform and this infrastructure to come, for making it possible for all of us to come here and attend this session. GCCI gave us the platform. Ankit coordinated with the speakers. So I would like to thank Maulik sir and Maulik sir both. Maulik Shah sir flew from Mumbai today, and Maulik Jasani sir has consented and agreed to come over here. So a big thanks to both the speakers. And I also express my gratitude to all the participants who have shared their time and come over here to make this session a very value-added session for all of us. Thank you. Thank you very much.
Thank you all. Let's all stand up for the national anthem. Thank you.
जन गण मन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल गंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे।